In this video, I'm going to tell you guys what an accredited investor is, the definitions thereof, why the regulations even exist with regards to limiting investments to accrediteds or non-accrediteds, those kinds of things. What's going on, YouTube? My name is Matt Faircloth, and my company is called the DeRosa Group, and we are a real estate company that's dedicated to transforming lives through real estate. Now, this video is a definition video, and it's about something that a lot of folks that we work with in the investment world and the people that are looking to invest in real estate want to know about, and that is the accredited investor status. It's important to note that if you're considering buying into a security that requires that people be accredited, you don't have to go send in your tax returns and your W-2s and your proof of income or whatever to the issuer of the security. You don't have to send them any of that stuff. There is a verification process that is third-party verified. If any syndicator asks to see your tax returns and those kinds of things, you don't need to send that to them. There should be a third party, whether it's your CPA, your financial advisor that knows the inner workings of your finances. And there's also third-party sites like verifyinvestor.com is one that we use. You uploading your things, that's all confidential, and they'll issue an accreditation cert back to the syndicator. The reason why we know about this kind of thing is the DeRosa Group, our company, offers syndications, apartment buildings, real estate investments, those kinds of things. And a lot of those investments that we offer require folks have an accredited investor status to invest with us. Not everything that we offer does, but a lot of things do, as do a lot of other things on the market that people can invest in that are typically unregistered in security investments. And we'll get into what that is, and that's how we know about it. If you guys want to hear more about us, go to DeRosaGroup.com. Accredited investor. This is a term that was defined by the SEC, the Securities and Exchange Commission, to a certain investor status, right? So certain investors are accredited, certain are not. There's not like a badge or a certificate or a diploma on your wall or whatever it is that you get when you're an accredited investor or not. There are just certain credentials that you have to meet, and you only have to meet one of them to become an accredited investor. So let's get into what those are. I should note that Investopia is a phenomenal site. I'm not affiliated with them, but that is where we get a lot of our definitions that we send to people, and their definitions are very clear and concise. The first hurdle that you can meet to be an accredited investor is income, and that's earned income, meaning like income from a job or passive investments. All those kinds of things can be considered earned income. What doesn't qualify as earned income is capital gains. So let's say you made, I don't know, $300,000 selling your house one year, and then $400,000 selling a bunch of vacation properties the next year. That's capital gains. It's not earned income. The cash flow you make off those rental properties does count towards earned income, but earned income are things like your job, cash flow, dividends, those kinds of things. The earned income hurdle as an individual is $200,000 per year over the last 2 years, or $300,000 if you are filing jointly with a spouse. And if you're going to qualify for the $200,000 in year one, you can't lump in your spouse's income and qualify under $300,000 in year two. It has to be 2 years of $200,000 individually, or 2 years of $300,000 of joint income with your spouse. It has to be one or the other to qualify for the income requirement for accredited investors. So it can be that, or it can be off of net worth. Net worth is adding up the value of everything you own, cars and your cash in your bank account and your retirement account. And a lot of people forget that, by the way. Retirement account goes towards your net worth calculation. One thing you can't count as an asset is your home. Some would argue, including my friend Robert Kiyosaki would argue, your home is not an asset anyway, so you shouldn't be counting it to begin with. But if you add up everything you have and take away any debt that you have on that thing, that could mean you own a rental property that's worth $300,000. You owe $250,000 on it. So that means $50,000 goes towards your net worth for that specific asset. Add all those things up, and if it adds up to more than $1 million, and you and your spouse can throw both your assets together, you and your spouse's checking accounts, retirement accounts, all those things, and if that equals more than $1 million, then you are accredited. So income, as I said before, or net worth. The third one is, that's a little less common, is if you're a general partner or an owner of the company issuing the securities. So if my company issues a security to buy an apartment building, which we do regularly, I can invest in that apartment building whether I'm accredited or not, because I am a general partner or an officer in the company. So it's important to note, if your company, an LLC that you are controlling, is offering and issuing a security, you do not need to be accredited to invest in it because you're an operator of the company. Now, the fourth one that's not as common, but it does play, is people that have certain professional certifications, investment advisors, those kind of folks that have things like Series 7 license and stuff like that. Look on that Investopia link that's in the description. If you believe you qualify through a Series 7 license you have or a Series 85, you can double check to make sure that that gets you qualified as well. So those are the four ones. Let's review them again. Income, 200,000 individually, 300,000 married, or net worth over $1 million, or working as a general partner and issuer of the company, issuing the shares of this of what's being bought. And the fourth one is those with certain professional certifications. Currently, that's just financial advisors of the like. Let's talk briefly why the SEC requires that there is a such thing as an accredited investor. When you're buying something like a share of real estate or a share of an oil site, or many other things that are accredited, sometimes IPOs are accredited requirements, things like that, it's because these are non-registered securities, meaning like what we offer at the DeRosa Group, shares of an apartment building, they're not publicly traded. We're not a REIT. We're a privately traded security. It is something that we have to make the SEC aware that we are exempt from registering with the SEC as something that's something that FINRA would regulate or that would become traded on a public platform or something like that. We're not that. We are exempt. And we're exempt because we're only going to sell to accredited investors. Now, we can sell to just accrediteds if we're going to solicit, meaning like I can shout it from the mountaintop, I have a deal, invest in my deal. That's called solicitation. You can do it on social media. You can do that in newspaper ads. Sometimes you see companies investing in or soliciting investors in ads and things like that, but it's only for accredited investors. They can solicit, meaning, paid marketing, or go to people they don't know and offer this up. If you only are going to offer your investment up to accredited investors, then you're allowed to solicit and you are exempt from registering your syndication with your deal, whatever it is, your security with the SEC. If you're going to offer it to people that you have a pre-existing relationship with, like my Uncle Charlie, my Aunt Susie, my next door neighbor, people that already know and trust me and know me in their network, then I don't have to register with the SEC either, and they don't have to be accredited. So that's called a 506B offering. The prior one that I was talking about with solicitation and accredited only is a 506C. Look at like 506B standing for B for buddy, right? Those are your buddies, your friends, people that you have a pre-existing relationship with. It is even more regulated. The paperwork's a lot more, but you can do it, and you can be exempt with the SEC if you meet the criteria that's listed on the SEC's guidelines. And I should also just state right now that I'm not an attorney, nor am I an SEC advisor. I'm just a syndicator that has offered these types of things on a regular basis. There's other 506 offerings. There is a 506A. There's a Reg A plus. There's this. There's that. The bottom line, guys, you should get your advice from me. You shouldn't get advice from your neighbor Johnny. You should be getting your advice from Google. There are great attorneys out there that you guys should hire that if you're looking to offer a security, something that is available for people to buy as an investment in a vehicle, then you should talk to an attorney about setting yourself up properly with a proper exemption, proper documentation, proper I's dotted, T's crossed with the federal SEC. And there's also state-run SECs for every state in the union for where your investors may be from. And good attorneys know what needs to happen with regards to those entities and what needs to be in your offering documents and all that fun stuff. So do not try this at home without an attorney helping you guys out. Again, if you're an accredited investor or if you meet the criteria that I said, congratulations. The world is open to you with regards to what you can invest in. There's a lot of options out there that you have. Just because somebody's offering and what they present to be an accredited offering does not mean that they're a great syndicator. It just means that they know the rules enough or they have a good lawyer in their corner. You still need to do your due diligence on that offering to make sure it looks right for you and meets your investment goals. And if you're not quite accredited yet, there are offerings out there. You got to establish yourself a pre-existing relationship with someone who does offer these types of securities on a regular basis, but offers them up to their inner core network in that. So become part of their inner core network, become part of their offering base. And when they have something that you had that pre-established pre-existing relationship with them, that you could be on their offering base. Before you know it, you'll build up your assets and your net worth will rise up and up and up, and you'll become accredited and you can offer up yourself as an investor into larger offerings as well. Rest assured, the SEC is very quickly changing these rules. They are antiquated. The rules that I'm talking about here, some were written in 1933. These rules are becoming updated. They're changing. The Jobs Act changed a lot of these things. It's just the whole accreditation thing altogether and maybe making the whole accreditation thing go away. Until then, it's still here. So it's important to know whether you're accredited or not. long-winded definition, but you know me, I get carried away in chatting about this kind of stuff with you guys. So I hope this is of value. If you're accredited and you're looking for places to look for more places to invest, or if you're not accredited and you want to learn from us, check us out at DeRosaGroup.com. Either one, we'd love to hear from you guys and chat with you further. It's important to note that if you're considering buying into a security that requires that people be accredited, you don't have to go send in your tax returns and your W-2s and your proof of income and whatever to the issuer of the security. You don't have to send them any of that stuff. There is a verification process that is third-party verified. That's what I got for you guys. Make sure you check out more videos here on this YouTube channel to hear more about real estate investing and all the cool stuff that we do, education and investments, all the cool stuff that we're up to. Have a great and profitable week.